Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on April 26th. So it's been an encouraging week for the market. Up, obviously, up is good, down is bad, as I like to say. So it's been up. It also hasn't been all smooth. I mean, we've seen interest rates advance a little bit, like poke to new highs. We've seen Meta and ServiceNow and some other bad reactions to earnings. Of course, we've seen some good reactions to earnings here today as I record this. But all in all, it's not like it's been all smooth sailing. Inflation was a little bit higher than expected today and so on and so forth. But the market has been able to get off its knees. Now, it hasn't really changed much, at least with our methodology. The intermediate term trend, if you want to call it sideways, you can call it sideways. You can call it down. But I would just say it's not up, which is the most important thing to me. And that goes for the indexes, most stocks, most sectors, that sort of thing. And growth has been lagging a little bit while defensive stocks have been not roaring ahead, but definitely outperforming and picking up a little bit of steam here. So we're not, I wouldn't say we're out of the woods, but up is good. And it kind of plays in, I think it plays into the view that, you know, we're in a correction. Hopefully that was one big shakeout and we just roar ahead from here. And I'll get into that in a second. But even if not, it kind of goes into the view that, hey, this is probably a correction. We're going to go higher, hopefully eventually, but we have to kind of wait out this tedious period for now, okay? I think the biggest thing going forward, the two biggest things, one is interest rates, of course. If they skyrocket from here, you know, it's probably going to be an issue for the market. More importantly, there's going to be earnings season. There's just a lot of stocks because the churning in the market began kind of February, March. There's a lot of stocks that have been sitting around or correcting for 6, 8, 10 weeks. So if you do get a positive report, it could be buyable, or at the very least, it probably would put in kind of a low that the stock can work off of and maybe provide some buying, you know, some nibbling opportunities, and then you buy more on the way up or something like that. So that's really what we're going to be watching. Conversely, of course, if we just see a bunch of duds, you know, this market, this kind of retracement into resistance here will probably fail and we'll have more work to do on the downside. In Cabot Growth Investors model portfolio, we sold some stuff late last week. We're about 44% in cash, which is, you know, pretty good chunk of change. I'm not anxious to go higher than that, but I'm also not anxious, you know, I'm not going to rule out a little move one way or the other, but I'm not anxious to put, you know, 25% of it back to work unless we can really see the indexes and a lot of stocks push above resistance and show some power. Right now, like I said, this week has been good, but, you know, we just need to see more and to see the indicators turn positive, okay? Let's hop into the chart, show you what I'm talking about using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. So here's the NASDAQ. And this, you know, the low was last Friday. It got ugly. After I recorded the video, it kind of got a little ugly there in the afternoon. But it's been pretty good. And this day yesterday was encouraging. You came in and Meta and ServiceNow got hit. But it was really support almost the entire day, you know. Overall, though, if you just take out all the wiggles, and I try not to get too close to things, you know, we're just kind of, quote unquote, just kind of coming back here into resistance, into the 50-day line, into the 16,000 level. This is the NASDAQ. You know, if we go up from here, I'll show you the rest of the indexes here in a second, but if we just kind of power ahead from here, that's kind of what we call a whipsaw buy signal, which actually can be pretty powerful because usually it often comes early in an overall bull move. It shakes the tree really good, and then it just takes off, okay? So that would be ideal, and I'm all for it, and we're ready for it if it happens. But, you know, first things first, right now we've bounced nicely, but kind of right into resistance. And this is just kind of what I mean. We're just kind of, you know, net, the NASDAQ hasn't gone anywhere here since early February. So there's been a lot of movement, but it's not a lot of progress. The other thing is that NASDAQ, and I'll touch on this a little bit. The NASDAQ, I wouldn't say it's lagging in a huge way, and today is nice. It's outperforming today. But it's not among the strongest of the indexes, at least at this point. So S&P 500, same sort of thing. Nice shakeout, nice comeback. But again, we're just kind of right into the 50-day line here. 50-day line's not magic. We can go above it by 0.5%, 1%. But, you know, it's a pretty good line of demarcation. And this would be a logical place. If the rally was going to fail, say this is just a rally and we're going to go lower, it would probably fail here. You know, maybe we gap up Monday on some good news or something, and then it reverses. I'm just, you know, that. So if we don't pull back, what I'm trying to say, it would be a good sign. Okay, just running through. Well, let's look at the NYSE Composite. Almost the same sort of pattern, right to the 50-day line. We'll look at the Russell 2000. This is IWM, still weaker. You know, small caps still bringing up the rear, and even mid caps here. Again, you kind of have this pretty sharp decline and relatively modest bounce so far. Okay, so we'll just see how it goes. Again, I think it's up is good. I'm glad we didn't, we were very oversold. So if we couldn't bounce at all this week, that would have been pretty bad. If you can't bounce from oversold sort of thing, it usually means something deeper is wrong. So we have bounced, but I think really it's just going to come down. We have so many earnings reports from so many stocks and sectors, growth or otherwise. And I just think if you're just going to get a bunch of gaps higher, there's going to be a lot of, like I said, buying opportunities or names to at least add to your watch list, and it'll probably result in sort of a new green light, but we're not there yet, okay? Just going to run through a few other things before we get in the stocks. Net, it really hasn't done much here the last week, but this is the 10-year note yield. And just noting that it did actually tag its highest level since November 1st yesterday. And the same thing with the 5-year note, same sort of thing up here. So, I'm just keeping an eye on this. It's in a solid uptrend for rates, which is a downtrend for bonds. So it is still a headwind. I'm not going to get into all the inflation readings, let somebody else deal with the macro. But, either way, I think if rates just kind of keep doing this, it's going to be difficult for the market at least to go up. I'm not saying it has to plunge or anything. So that's something to keep an eye on. The other thing, too, is just when you compare. So, again, like I said in the intro, this is XLP. It's not like, it's had a good few days here, don't get me wrong, but it's not like soaring to the heavens. But it's definitely pushing higher while the market is, still below the 50-day line. And what I find interesting is even utilities, which, you'd think would be kind of getting hit with the interest rates hitting a new, 6 or 8 month high or whatever I just said, 6 month high, I guess, 6.5 months. These things are also hitting, whatever highs going back to August, September. So there's definitely some money flowing into defensive stocks here. Doesn't mean it can't change in a couple of days. These things sell off, the NASDAQ gets going. That's going to be more important, but I am keeping an eye on this. Meanwhile, you just do have, so semiconductors, which have been kind of the leading growth group. Sharp pullback, not abnormal, longer term, well above the 200-day line, you can see. But kind of just retraced here into the 50-day line. Again, kind of a key area. The IPO fund, which of course is recent IPOs, not much of a bounce here at all. I'm not going to put too much stock in just this one thing, but that's a sign. And then the momentum fund, which is symbol MTUM. So it's kind of high relative performance stocks. Obviously, it kind of looks like the chip index. There's probably a lot of chip stocks in there, but it's a pretty good loose measure of growth stocks. Again, you have this pullback, and just so far the rally, it's good, but it's not decisive or anything like that. And you could run through other things like this is the IBD 85 index. We look at some of these, again, down, back up. So good on the bounce. Long story short, good on the bounce. More work to do. Okay. The other thing I would just say is we're seeing. I'm not sure what to make of it, but just, some of these things, this is Spotify. Spotify's had a big run. Okay, it broke out back here on the weekly chart, and it's been running really since probably October. I don't have a date on this, but yeah, probably October, November. And so it comes down, tests the 50-day line. We're just seeing some of this. It gaps up on earnings, then it reverses, then it sinks the next day. The next day it falls further, but finds support at the 50-day line. So it's kind of all over the place. We're seeing some more of this. Now, Vertiv has kind of tried to reverse that one day. Now it's kind of back to new highs. But just if you do get a stock, ideally, like I said earlier, you'll get a stock that's, let's go back to Spotify. Let's say Spotify didn't go up here. Ideally, you get a stock that's like this, and then it's corrected a little bit, and then it gaps on earnings. When you get in these things that have just really haven't taken on any water, we're still seeing some selling on strength going on. We'll see how it plays out, but just that was one characteristic underneath the hood of the market this week, that there was some selling on strength on earnings reports. Okay, so either way, we're still cautious for now, but you got to be ready and flexible. We got our watch list ready. If things power ahead next week, we'll probably be putting money to work. Obviously, if they back off, who knows? Maybe we'll even be doing a little bit more selling. Okay, now in terms of individual stocks, I just want to mention, so this is Google. No big reversal today. Google is a big, obviously, like mega cap stock. It's not really in my bailiwick, but at the same time, one lesson I learned a long time ago in 2007 was to never underestimate like big liquid institutional stocks that gap up big on earnings. And this is a 10% move so far. We'll see where it closes. And it's new all-time highs. And you can see, again, it hasn't been in some sort of huge correction, but it's been pretty much consolidating here for a couple of months. It got hit. It had some bad news on, I think it was AI or whatever it was, but you can see it basically didn't go anywhere net for a couple of months here. So it's just kind of interesting. It's not something I'm probably going to traffic in, at least in Cabot Growth Investor, but just to highlight it. A lot of names we've mentioned, some other ones here. This is Novo Nordisk. They do have earnings on May 2nd. A lot of these have earnings coming up, so it's really more of a how you want to handle it. Down a few weeks in a row, but just, you just look at the weekly chart. It's had a huge run, obviously. And just not a lot of selling in here. It looks like a lot of things we've talked about in recent weeks. Down, but not out. Trying to round out a bottom here. And I could just see if it can kind of get going here, it certainly would look like a reasonable pattern. Okay, so that's NVO. On the tech front, these are a little smaller. This is Onto Innovation. Good volume yesterday. But just overall, this is kind of like more of an AI chip equipment play and sort of a turnaround starting this quarter. So they got earnings on May 9th. But again, this is kind of what you're looking for. This is technically kind of a double bottom base, but it's 1, 2, 3, 4, 5, 6, 7. So 7 weeks, I think 7 or 8 weeks, if I counted that right, in this sort of consolidation, earnings in a couple weeks. I think that's going to tell the tale, right? So you have stocks like that. Duolingo, this thing remains all over the place. I love this story, but you'd like to see it come under control. And they did get added to an index, which that's what this volume was back here. It's not really real volume, so to speak. It's just index addition. But overall, it's kind of had this, multi-month sort of consolidation pattern, still in a longer-term uptrend. Earnings are coming out again in a couple weeks on May 8th. Just a name to keep an eye on. In the infrastructure field, Core & Main's a name, still like it. Has pulled back. Again, it's not exactly roaring ahead on this rebound, but just the overall pattern of, nice run, low volume consolidation. Maybe it needs to hack around for a bit, but C&M looks good. And that doesn't have earnings for a while. Martin Marietta, I think this was in top 10 this week. It's not very dynamic. And let me blow up this chart for you. Doop. There we go. But you're going to see, nice big run here. And then it's hacked around, shook out below the 50-day line, now coming back up through, has earnings early next week, April 30th. So obviously if it, gaps down, all bets are off. But if it can react well, again, I'm not going to say it's buyable on the gap. You have to see how it looks, what the market looks like. But if it does react well and holds the gains, that would obviously be a good thing and tell you that the run probably isn't over. And then even like Quanta Services, these aren't like, infrastructure is not going to be like, oh, revolutionary new road or something. But, there's a lot of sort of long-term tailwinds there. And this one had a nice gap. PWR a couple of months ago ran, test the 50-day line, and then now rebounding. Okay, let's go back to the regular scale. In terms of cyclicals, this is the one thing I am kind of intrigued by. Of course, it's earnings season, so you're going to get sort of something for everyone. But United Airlines, UAL, I know it's an airline, but really big volume here. The earnings and sales have been huge for a while. I mean, just big. And $10 last year, $10 this year, but the stocks didn't do anything with it. It's just all about investor perception. And now maybe we'll see what happens. Maybe perception's changing, like, hey, these are going to stick around for a while and the stock shouldn't be $50. Maybe it should be $70 or whatever. I'm just making that up. But anyway, that's acting pretty well. And then Royal Caribbean, I guess, it's been in a nice long-term uptrend here. Whoops. I'm sorry about this. Okay. Technology, But anyway, it's had this kind of 2, 3, 4 month consolidation. It's been up and down. It's been hard to really get a hold of recently. You can just see really since the start of the year, it's just been down, up, not a lot of net progress. But after this 50-day line test, it did report earnings this week. Not a huge reaction, but either way, it's sitting right near its highs. It's at a new relative performance peak, which is pretty important to me during our market correction. So you're even seeing some cyclicals look good. Restaurants look good. Chipotle, I know it's a $3,000 stock, although I think they have a stock split coming up if that's important to you. But either way, it's been very, very strong since the market bottom back here, and kind of consolidated under that round number resistance, but just flagging a nice earnings move for you. And then kind of the other end of the spectrum on that, I've mentioned Sweet Green before. This is SG. Obviously a recent IPO, went through the ringer, and then had its sort of coming out party again a couple of months ago on earnings, had a big run up, and then pretty sharp into the 10-week line. But you can just see not a lot of volume on the 10-week on the test of the 10-week line, and now starting to come up. Again, doesn't mean it can't thrash around here. They do have earnings here on May 9th, but overall that's kind of the That's what you want to see, is support at the 50-day line. And then last but not least, just moving, I guess this is cyclical too, but more commodities. Southern Copper was the first, it was the strongest, I guess, copper name. And it kind of just had this very long-term, not very, but pretty long-term breakout here a couple of months ago. Great volume and great post-breakout action. And now you've just seen, some kind of the initial wobble. You know what I mean? So you're going to have some wobble with the market. You're going to have some profit taking, economic growth fears, inflation, the Fed, all this stuff that affects commodity stocks. But all it's been able to do so far is really shake out to the 25-day line, give or take. And now it's popping back up. Again, not flagging it, saying it's a strong buy here necessarily, but just it's acting well. And usually, if the market doesn't fall apart, usually these sort of, no matter what sector, but usually these sort of big breakouts that do follow through for a few weeks, usually the first pullback ends up being buyable. Obviously, it depends on the environment, but it's just something to flag, okay? So overall, all I'll say about this week is good, up is good. Glad to see things get off, not just get off their knees, but push hard. So you want to be looking at relative strength and whatnot. I know I'll be doing a lot of those screens this weekend. But I think it's just, at this point, it's kind of, it's kind of 4 steps down and maybe 2 steps back up at this point. So it's, you can't, I'm not saying you have to wait for the NASDAQ to come out to a new high, but you got a lot of resistance in here on the NASDAQ, a lot of other indexes, and a lot of leading stocks and sectors. So I just think, next week will be important. Can we kind of confirm on the upside, and this was one big shakeout, or do we have some more correcting and consolidating to do? Okay, I'll have more to talk about that, I'm sure, next week. So thanks for watching, and come by again next week for the next Cabot Weekly Review.